a core part of like raising money is storytelling, and especially for us working inside of emerging markets and getting people to care about problems that they are not necessarily impacted by. I think that was a very difficult um, journey for us to be able to like navigate, understanding how to talk to investors and what investors care about. I think that's a very, very, I feel like I could write a whole book about that, especially for like emerging market founders. One of the things that being a founder does is it'll expose your areas of competency in equal measure as well as your areas of incompetency. Because if you think you don't have an attitude problem, and then it turns out that you do, you will see that by employees leaving, you know? If you want to be investing in people and giving people like motivation, um, and you think that you're probably easygoing, but you're actually pretty tough, or you think that you're really good with money, but then you realize, oh, I shouldn't have spent that on that trip, and I shouldn't have done this, and I shouldn't have done that. Like it'll expose both your competency and incompetencies in equal measure. So ViFi doesn't belong to Varun and I. We are just we might have been the founders, but
Thank you so much, Tony, for joining me on the podcast today.
thank you for having me. Excited to be here.
Absolutely. Our guest today is the co-founder of ViFi Labs, a decentralized stablecoin protocol that combines foreign currency, stablecoins, and DeFi liquidity to enable businesses realize the best FX rates at any volume. I'm excited about this episode because Tony is going to be delving right into the specifics and why he's building ViFi Labs and basically, all about his background story. So yeah, it's great to have you here. Now, if someone just clicked on this episode, why should they stay, and why do you think they'll walk, or what do you think they'll walk away with by the end of this conversation?
I think when people look at like regions in like Africa and LATAM and they talk about stablecoins, it's very clear to everybody that stablecoins have found product market fit inside of these regions. What isn't absolutely clear is exactly how people are using stablecoins, why why they're actually using stablecoins, and the kind of impact that it is having is inside of this region. So part of what I hope to be able to shed light on is exactly how stablecoins are being used and why we still haven't solved the last mile problem in terms of their full adoption and usage domestically.
Amazing. Thank you very much. I'm super excited. So let's jump right in. Now, one of the things we do at Builders Block is basically understand like the background of each founders, right? And one of the things that I saw on your profile was Kenyadadian, right? What does that actually mean? Do you want to walk us through like your background story, pretty much everything about growing up?
Wow, okay. I don't know how far back you want to start. In 1988, I was born. um, but yeah, I grew up in Nairobi for about 29 years and got married to a Trinidadian woman. And in 2017, I moved to Trinidad um, soon after I got married, and been here for about 8 years. I'd say the past 2 to 3 years have been like, since started this whole founder journey, I've been half and half between Kenya and Trinidad. But the whole Kenyadadian name basically is like a portmanteau, like a meshing of Kenya and Trinidad, which is kind of how I feel about who I am, and especially now, the persons to whom that title actually belongs to are my two kids, who are the true Kenyadadians with their dual citizenship and all of that. Like,
Yeah,
yeah.
really amazing. I think I've gotten like more context into what that means. And so now, can you like give us more context into like your career and educational background, and how that has led you here?
Right. So for me, I think I was a part of what part of my high schooling and all those things was that uh I essentially was forced to finish my high school as a private candidate, um, which was a result of various parental decisions and gaps there. But my Form 3 and my Form 4 essentially self-study as I was preparing to go to university. Or at least I thought I was going to go to university around that time. As I was in the middle of preparing for that, I had to step aside from school and do all these things by myself. So I taught myself like different curriculums, eventually finished with pretty decent grades. But then my parents just couldn't afford to take me to school at that particular point in time. So much like family drama and all these kinds of things, right? But my mom specifically couldn't afford it at the time. And by the time she could afford to send me to university, my younger sister was ready to go as well. And so I made the difficult decision not to go to university because she was dead set on becoming a doctor. And there was no way my mom could have afforded for both of us to actually go. So I decided to continue down this path of my own. Did a couple of different like weird businesses in the middle, tried to like did like so many different side hustles growing up. Ultimate hustler, always trying to make ends meet. And I think when I was 18 or 19, sitting in a market after having transported goods from a different country, somebody asked me, "What are you doing here? What are you really doing here? Aren't you supposed to be in some kind of office and doing all these kinds of things?" And I was like, okay, yeah, maybe. And so with that, I then went into a whole different line of work. Somebody gave me a scholarship to be a to join what was the first mobile training academy in Kenya, which is called eMobilis. And it was an MIT Nokia joint program. And this is the first time I'd been exposed to programming as a concept, really. Before that, I was an avid computer user, been first computer I started using, I think my mom bought a computer when I was 8 years old. I did everything you could imagine with that, which is like from taking it apart to like rebuilding it, taking apart the monitors when I was super young in my teen years. In the middle of that, I tried to do everything like creating value on top of it as much as I could. I was a DJ. I was using like tractor DJ back in the day. I did gigs when I was younger. When I was in Form 3, I started my first business where I was supplying music to all of the DJs in Nairobi because they hadn't figured out LimeWire, and I had. And so I was the one selling music to like all of the DJs in Nairobi. So, and that was like 6 months ahead of like releases and things of that nature. But then I got to Form 4 and my mom was like, "No, you can't continue doing business. You need to go and focus on your studies and all these things." So I shut down the business, or rather I left the business. And I focused on my schooling towards the end there. So everything about, I guess, my years growing up was very, very unconventional. And so when I started this whole programming journey, I was very interested in creating value and like looking at different things. So went from that into doing websites for people. I was training on mobile apps, trying to do different things as well. So I built a couple of mobile apps back in the day. And then there's this thing called the iHub that launched in Nairobi, which was a really, really good like seeding ground at the time, because iHub is where every techie used to go. And I used to spend hours there. I used to spend entire hours there. I'd be coding until morning, like usually, because they had, I think, 600 Mbps or something ridiculous like that. Or like 300 or something, or maybe 60. Now that I'm probably romanticizing it because time has passed, but they had really, really great internet at night. So I would be coding there at night, and there were a lot of other people who would also like overnight there and would be coding and learning and doing different things. Then I got into like startup consulting, took a Google UX masterclass, understood a couple of things about how to build a business, and like building a tech business, something that was always kind of appealing to me. So consulted with a couple of people. I had like a lot of my friends inside of my friend circle or people who went on to be founders. But I think at the time, there was a whole narrative inside of the Nairobi ecosystem that was more like social enterprisey, So not like building a bare bones hard business. And I think the only person who was really like focused on building like a bare bones hard business was Augusto Lico, when he started Pesapal. And I remember being there when Augusto launched Pesapal at the iHub back in the day. So it's been an amazing journey. Left that position. I worked for like a credit union where I built mobile banking apps, and I built SMS banking and ATMs and all those kinds of things, and saw like the intersection of how finance plays with technology, and kind of felt that's when the bug kind of hit. And from that point, held different roles. Even when I moved to the Caribbean, I was still working with social security software and did like social security implementations in like Trinidad, St. Kitts, Belize, a couple of other countries as well. So my life has always been intertwined with this whole kind of finance dynamic, and that's how I finally ended up in crypto. Yeah.
Yeah, really amazing journey. I think one of the things that you said that stood with me was the fact that like your journey has been like unconventional, right? It leads me to like the next question where like what did you understand about the world early on that most people around you did not? Trying to sacrifice your ability to go or to further in school for your sister and all of those things. What were like some understanding that you had earlier on that most people did not have?
I think for me, I learned there's some things I knew about myself really early, and I was always willing to better myself. Like no matter what the situation, no matter what the circumstance, never had a problem with betting on myself. Um, and that's been an overriding feature of how things have been. Because like again, I was a really, really great student in high school. Would have gone on to do like very many things. People I was beating in school ended up like in the papers and things of that nature. But because of the whole parenting situation and all these things, like, that was actually cut short. Um, and then like the way that I actually finished high school was me going to like a local tuition center. And tuition centers essentially places where you take your kids after school for 2 hours. And then during those 2 hours is when you actually like like have remedial classes and then like have tuition, and then the kids go home. But during the day, the tuition centers are open. So I walked into one of those tuition centers, right? Found the owner there, and I told him, listen, whether or not I become a high school dropout is entirely up to you. But this is what I can afford. This is how this is the kind of help I need from your teachers. I just have questions because I can actually self-study, and I was studying online. I could do all those things. And so I don't have a problem like guiding myself, but I will need assistance at different points in time. And I'm not taking up a lot of your time. But whether or not I end up a high school dropout is now your choice. It's not me. So the guy was like rock back in his seat. He was like, okay, fine. This is what you'll do. Come between 8 and 1. And between 8 and 1 is when the teachers they're supposed to be here by 8 because we have formal employment, and so they don't come just for the afternoon. But while they're actually here, you could actually take advantage of that and keep asking your questions and all those things. And it worked out pretty well. I ended up with like 2 A's, 2 B's, and like 1 C when I ended up finishing. And so it was a consistent feature. So when university wasn't a thing, I was like, you know what? Bottom line, I think I remember reading about Steve Jobs and how he just had to take a bet on himself. And like, I was like, yeah, sure, I'm going to keep taking a bet on myself. And even when I left like a really good job in Trinidad to jump into crypto, people are like, why? This is super crazy. You have a good job, you have seniority, you have rank here. You're like on your way to actually like having stability and all these things. And I was like, no. Same time when I left Polygon, as well, because I was right. I mean, things were okay there. Things were comfortable, but there was a bug that bit me, and for like 6 months, I knew I had to go out and branch out and build my own thing, simply out of seeing, um, like while I was there, I think I traveled to like 33 cities in the course of 2 years, and I saw how different people in different regions are actually using crypto, and through it all, I got a very clear understanding of what what the gaps were, and from there, like really really clear in terms of what the value that I could actually create looked like. Yeah.
Really, really interesting. I think that mantra also is one thing that I'll be taking away from here. Really, really bet on yourself. I think you've connected it all to like every step of the journey, while you were doing great at your formal work before joining crypto, and even while you joined crypto and you left Polygon. Now, let's walk back to, what basically convinced you that crypto was not just a trend, and that it was worth something dedicating your time to at the time. So this brings us to like, you've built amazing financial software at different companies and different regions, and now you had to transition into crypto. What was the move like for you? Do you want to walk us through like your journey?
I think one of the initial things was in 2017, 2018, when I moved to Trinidad, I needed to send money back home to my mother pretty urgently. And that wasn't particularly straightforward from a banking system because of the way the world worked, right? So if you're in a global south country, there's this thing called correspondent banking. And so all the banks in the world can't connect up to each other, right? So what now essentially happens is that everybody connects to a couple of anchor banks, either in London, New York, I guess Dubai, I'm not sure about Dubai, but London or New York or something of that sort. And those banks have like correspondent banking relationships with banks in different regions. And so that's how you're able to move money through Swift and all these things using like all of that correspondent banking infrastructure and software. So I went to do a transaction, send money urgently, and I couldn't. Um, and the bank kept rejecting it because the local bank were racist. They were like, "Oh, Africa, why is money being sent to Africa?" Because that's how Kenyadadians like have like the prejudice against Africans, which is something I also came to learn as I continue to live here. And then when that no longer worked, I had to contact a friend of mine. I went into looking at all of these different solutions, like World Remit and all these other like big like remittance companies that had all the press and everything. All of them work out of the US. And you either have to be in the US, the UK, or like Europe for you to be able to access any of those services. And I was like, well, this is messed up. I just happen to be in the Caribbean, which is a 3-hour flight from Miami. But you're telling me that my credit card isn't actually good enough, and I'm gainfully employed. And remember, this is an emergency. So I called my friend in DC. I told him about what was happening. He then sent money to my mom, and then I then had to rebalance and like pay him using PayPal and all these things. Because even then, PayPal wasn't set up in a way you could transfer value across borders the way it is now. Not everybody had a PayPal account. Everything was just like really, really rudimentary. And so around that time, another friend of mine who was based in DC introduced me to a guy in Nigeria, Flacos, shout out Flacos as well, where we started working with him on like a remittance solution using Stellar at the time. So we made a kind of big bet on like, well, yeah, we could actually leverage the whole Stellar ecosystem to transfer value and all these things. Started building out the app, different aspects of it, and blah blah blah, and like things were going really well. And then crypto winter hit, boom, and all of our funding dried up, and everything kind of like screeched to basically a halt. And nobody knew what they were doing with this whole crypto thing. And I was like, okay, well, I have bills to pay. And that time I wasn't as like properly pilled as I am now. So I was a bit of a tourist then, but I still kept tabs on like the industry. Went back to doing like financial services, which is how I ended up like doing like infrastructure for like social security services across the Caribbean. But kept tabs on the industry. And in 2020, I jumped back in. And then afterwards, yeah, so after 2020, jumped back in, started doing like smart contracts. Then from there went on to do um things in like different kind of implementations. Then worked at Coordinate, which is like a DAO tooling company that allowed DAOs to invest their treasuries into Yearn vaults. So like building like Yearn vault integrations and things of that nature would really have allowed me to be able to cut my teeth on DeFi generally, not just as a user, but also as a builder. And yeah, then from there, developed this passion for like developer education, ended up at Polygon, woke up one day, my boss and my boss's boss were fired, and I was promoted to like the DevRel engineer, which is like one of the wildest experiences of my life. Continued working there with just the amazing people there. And really appreciate like my time at Polygon and the exposure I got to seeing different aspects of crypto. But there was one seminal story that kind of like stuck with me. Inside of that whole discussion was when I think I did like there was a Polygon engagement in Uganda, and I met this kid, and this kid he went to Turkey, and he registered as a student in Turkey, which then gave him like banking access, right? And so he had a bank account in Turkey, and then he went back home to Uganda and spoke to the Turkish Businessmen Association and told them, "Hey, I could settle your Uganda shillings directly to Turkish lira." And basically, the kid was arbing Binance P2P markets in Uganda and in Turkey to be able to settle like trades in less than a day, in T+1. And his run rate was like super amazing, right? He had gotten the confidence and like really understood exactly how like what their needs were, and that's what kind of sparked off the whole thing in terms of one, there's a massive arbitrage opportunity, there's underserved markets here, and there's no DeFi infrastructure that exists for this kind of trade to actually be possible. And those are kind of the seeds that began like a thread. And as I began pulling into it and pulling on it, it unraveled into what ViFi is today. Yeah.
Really, really amazing journey, right? So I'm really curious as to where did DeveloperDAO come in all of this, and what impact has that made, in your journey in crypto?
Wow. I mean, how could I talk about that? I feel like doing the Vince McMahon, like, meme. It was like a really great time. It was like a really great time. So I'd been following Nada Dabbit for a while when I was doing like React Native stuff, right? And he actually created like one of the most popular libraries, React Native Elements, back in the day. And that's how I found him online. Then saw him join Amazon, and I was really interested. So I was like, yeah, okay, cool. And at the time when I was dabbling in crypto and doing smart contracts, I saw he left Amazon to join like crypto full time, and I was like, this is interesting, and that's what kind of piqued my interest as well. At this time, I was doing like basic like DeFi integrations, like jobs here and there, working with some other very sketchy individuals. I mean, who I later learned to be sketchy. I was too new, too green to understand what a rug pull is, but people rug pulled off of code I wrote, which like I really regret because I didn't know these individuals well enough. And in the middle of that, I then saw that he launched this thing called a DAO. I was like, and he called it DeveloperDAO, and it was a single tweet. And I struggled. Like I went, and I think gas fees that time was like ghastly. They're like $50 or something of that sort. And I remember trying to buy like I had a $50 limit on Binance using my Trinidadian account, and I had to wait, I think, 2 days to get the gas fees and move the money and do all these things, and like eventually joined, and so started like a massively impactful journey of my life. Got connected up with so many people from all over the world. It was such an enriching experience. Joined the Discord. I think I joined the first time. I bricked something. Tried to move up to like creating value. There was like different people, you don't know each other, but formed what I would call like lifelong friendships out of that whole experience. I could name so many names. People who I call on even up to today. Like I don't think a day goes by I don't talk to somebody from DeveloperDAO. So yeah.
Yeah, really, really amazing. Because I'm actually curious as to, how people can build network and relationships that last. Are there any like tips or like playbook that you want to give from like this experience? Because you mentioned that you have quite a number of like lifelong friends, even from like this community. Do you want to touch on that?
I'll say there's a couple of key points here to make. If you look at how the world has been structured in the Web2 world, I spent the better part of 2 years sending resumes to companies in the US and going through like all kinds of different like filters and things of that nature. And it was so difficult to just get get like a foot in. And I remember by the time I got like my first interview at Facebook or my first interview at Google, I'd already made the decision to move into crypto, right? But like I could only start to see some of those fruits like much, much later. And then I was going through the interview process and I'm like, do I really want to work for Google or Facebook, or do I want to work in Web3? I was like, I think I want to work in Web3. But then all of those things kind of tie into, first of all, having this kind of global mindset is super important, because that's what allows you to not just live out of the authority of your own experience and upbringing, but you're appreciating different perspectives and different people from different regions. I think that's an important like first filter. The second filter is that, especially when you're looking at Web3, but generally like tech skills and things of that nature, is that it's by and large a meritocracy, and especially Web3. When I had my first interview with Coordinate, I finished the interview, and because everything of theirs was like on was open source and everything, I followed up the interview with a PR that I opened on their code base, which showed them exactly what I could do, you know. And so that's like an important like a sense of agency, because you have this reduced walls and all these things that the the interview process in Web3, especially as a developer or somebody who's like creating value and all these things, doesn't begin and end just when like you're having the actual like discussions. Like there's ways you could show the value that you could create for that particular company or protocol outside of the traditional things. And then lastly, if you're looking at like building like your network and all these things, there's a very important point here, which is like the social proof, right? And your reputation really matters. You get your initial leg in the door. You want to continually invest in excellence. Excellence in terms of your execution, because it is the reputation that will open the next door. The fact that somebody could co-sign you and say, yeah, I know so and so, I worked with him in such and such a place, like it's positive or negative. Not everybody's gonna like you. Not everybody's gonna think you an amazing work or anything of that sort. But like, as much as you have the ability to be able to control that narrative, like you should be always optimizing for excellence in like every aspect of work that you're doing, because that thing compounds over time. The fact that I was able to get, like, I was on an investor call 2 weeks ago and somebody was asking me about my Polygon experience. And I could be able to say this and that and that and that. And the people they know are people that I worked with. And I would like to imagine they would give a favorable interview, you know? I mean, a favorable recommendation. And so it's really important, like, even as you're building your network, is like you make sure that you're investing in constantly being excellent in all that you do, because it actually compounds over time.
Yeah, I think the viewers are going to be, getting a lot of like insights and industry knowledge as to how to build network and relationship that actually lasts. All of what you said resonates with me a lot. Excellence is really, really key, and also reputation. I think that is something I'm also like investing in. Thank you very much. So having experienced both, working in Web3 full time for like some years, especially for like Polygon and also coding Ape, if I'm correct, right?
Mhm.
What changes fundamentally now that you're a founder? What's like the mindset shift required to transition from being like a developer to like being a founder operating your own business?
I think for me, it was many, many years in the making. First of all, having been a developer for like 15 years, and like I'd worked with a gamut of like companies, from large organizations to small indie startups, and I had a lot of experience on what not to do. I saw people try to build companies, people who had like an actual moat and squandered it. I have had front row seats to people getting funding and going crazy. I've also seen people not get enough funding and not be able to have the kind of impact they would have had. So there's like loads of things that you can't really replace at the level of experience. A lot of that also comes down to being a people manager. Like I had experience leading teams of developers, but also just different like skills and things of that nature that like time and experience teaches you. And so providing leadership and being a leader isn't something that you're going to start off with like just immediately. Because one of the things that being a founder does is it'll expose your areas of competency in equal measure as well as your areas of incompetency. Because if you think you don't have an attitude problem, and then it turns out that you do, you will see that by employees leaving, you know? If you want to be investing in people and giving people like motivation, and you think that you're probably easygoing, but you're actually pretty tough, or you think that you're really good with money, but then you realize, oh, I shouldn't have spent that on that trip, and I shouldn't have done this, and I shouldn't have done that. Like, it'll expose both your competency and incompetencies in equal measure. And a lot of that is going to be just come down to exactly how you're able to manage all of these expectations in a way that results in success. So I think there's like aspects of like leadership development that are important and key, but beyond the leadership development, I think also just being a successful founder is like 50% luck. And so you want to optimize for serendipity, but also optimize for excellence in execution and leadership.
So talking about being a founder, right? Now let's talk about ViFi, right?
Wow, yeah.
How do you explain
You should.
ViFi to your mom?
Well, my mom isn't the best example because she's an economist and she was the first person that I actually spoke about this with, and grew up in the house with discussions on like monetary policy, fiscal policy, things of that nature. And she's the one who finally gave me the initial green light and said, yeah, I don't think this will have a bad impact on an economy other than democratizing. But what ViFi is basically an exchange for USD stablecoins for non-USD stablecoins. That's what we are actually optimizing for. The thing with the regions that we're serving is that if you look at a lot of emerging market regions, there's a massive secret. And every central banker knows it's a secret, but we don't really talk about it in terms of central banks are motivated to overvalue their currency, right? Because then that has like an impact on like balance of payments and like things of that nature and monetary policy. But then the problem is that like they cannot always supply USD at the rate at which they've actually quoted. And so there's a need for them to kind of create that kind of balance. And even in like open economies like Kenya and I guess now Nigeria, there's still that need to be able to balance. So if I have $1 million sitting in a bank in say Uganda or something of that sort, and I go there and I say, transfer 500,000 to my business partner in the US or China, more than likely the bank isn't going to honor that 500,000 transaction because that money is there, but it's not really there. You know, nobody's actually sitting on that kind of liquidity because demand has far outstripped supply for USD inside of these economies and inside of these regions. So what that means is that we end up creating a parallel market. And the parallel market essentially is a phenomenon of the lack of supply. And that then creates like what in Argentina they call the blue dollar rate, the parallel market rate, the black market rate. And so if I was to ask you now, what is the difference between the CBN rate and the street rate for USD in Nigeria now? What does that look like?
Okay, so for Naira, right now I think it's 1389. but for CBN, I think it's 1350. Not sure.
Yeah, 1350. Yeah, yeah. So you're
Yeah.
looking at like a delta of about 40 naira,
Yes. Yes.
about 40 naira, which is a lot better than it had been, right? But yeah, so if you're looking at that as like a delta, which is interestingly more or less the same rate as Argentina, to be honest. Argentina is playing around the same kind of area. You're seeing that kind of like dynamic kind of play out. And so from a demand and supply standpoint, there are people who want to move. The other significant thing is that like a lot of African businesses and African economies are constrained by liquidity, right? So there's like price sensitivity, but if I want to do $1 million today, I have to have a relationship with the banker, and I need to give them notice. And so those particular constraints when it comes to moving fiat are the things that ViFi essentially solves for. If you have a local currency stablecoin that is truly permissionless, and then you have a DEX that enables you to be able to move in and out of those USD positions, then it means that people have the more democratized access, and potentially what was 13 1389 could potentially move to 1360 using ViFi, meaning people are able to import more, there's improved economic activity, and that's kind of impact we want to be able to have.
Yeah, thank you very much for breaking that down. I think there's still quite a number of things that we need to understand about Wi-Fi and basically how it works under the hood, right? Now you mentioned about liquidity and the fact that there isn't a lot of liquidity, in this part of the world. How is Wi-Fi coming in to solve that? Because in one of your tweets, I saw you mention single-sided liquidity and synthetic tokens. How do you want to connect this, and how does it change the game for this type of markets?
So part of the perennial problem in terms of providing liquidity in emerging markets, especially if you're looking at currency pairs, is that because it's a pair, whoever's providing liquidity has to be kind of okay getting paid in either one of these currencies. Now, a lot of international LPs or liquidity providers do not want to get paid in emerging market currencies. They want to get paid in USD, right? Because that helps them. They no longer need to rebalance that particular position, and it avoids the issue of them having to hedge against the naira and sell over time. So currently, if you look at what pre-funding requirements look like, right? If you run a remittance company and say you have people demanding like USD, you would have say $5 million, and then on the reverse of that, you have, I don't know, a couple billion naira that is then available for the downstream customer. And so what happens is if you're running remittances from USD to naira, over time you'll end up with more USD than you have naira. That whole liquidity has to be churned around and around, and you have to continually rebalance positions. Now, if you could ensure that an LP could just provide liquidity in US dollars, then it means that trade is being settled in US dollars over time. And with that, it means that like there'll be sufficient demand for domestic currency, but you have a synthetic representation of that currency, which then removes the exposure to US dollars. I mean, the exposure to like domestic currencies. And so an LP would no longer has to worry about that. So that really is the main like solve that we're doing from a mechanism standpoint, ensuring that LPs are being settled and being like balanced in US dollars. And that's what the single-sided liquidity essentially does. In our initial discussions with LPs, they want to support local currency stablecoins, but they're like, I don't want to hold Colombian peso. I have a big challenge with that. And so with the ViFi mechanism, nobody's asking them to do that anymore. We have synthetic representations of that, which is just like, it's just math. It's just mathematical representations of what that looks like that, supports whatever trade is actually required.
Yeah, really, really interesting, and well done to you and the team. Trying to solve those problems. You've spoken a lot about non-USD stablecoins, right? And do you believe the future of stablecoin is still dollar dominated? and what role does non-USD stablecoins play since you're building like ViFi in this case?
I think a big part of the thesis on non-USD stablecoins is that like a lot of people have these lazy takes where they think it's non-USD stablecoins versus USD stablecoins, and that's not the case at all. They are not competing for positions; they are playing complementary roles. And so, if I have USDT, and I could convert that USDT to CNGN, I could then convert that CNGN for Naira in a bank account. That is a flow that supports even greater commerce than asking people to bypass the local currency and move directly into USD positions. I think local currency stablecoins, first of all, serve as a very important unit of account inside of the virtual asset ecosystem. And so I could build lending products using a tokenized naira. I could build different kinds of like activities, do liquidity pools and things of that nature that retain the sovereignty of the nations that we're looking at. I don't think any government is looking to compromise on their sovereignty. And so if you're looking at the growth of the virtual asset ecosystem, in a way that central banks across the world could actually support, I think local currency local currency stablecoins play a central role in that.
Awesome. I think there's been like a lot of arguments as regards this even online, even while I discuss with certain people. But I think like you mentioned, they're meant to like complement each other, and not like one is meant to dominate, because for some reasons they have their own equal responsibility. Take for instance, everybody would first spend their naira first before even thinking of dollar. In this part of the world, people owe dollar because they want to hedge against inflation, and for what is worth, right? They wouldn't, in most stores, they wouldn't pay for anything using dollar, right? They still like transact in their local
Exactly.
currency, and for the most part, these currencies, take for instance CNGN, then opens up people to like the financial world with your naira, right? You can then be onboarded to CNGN and then plug into like the larger landscape of like the financial markets, so to say. I do think this is a great use case, and yeah, looking forward to what plays out in the nearest future, and how ViFi is changing the landscape even in major markets. So it brings me to like the next question: why does on-chain FX matter, and why should anyone care?
So if you look at FX generally, FX is the largest traded asset class in the world. You're looking at volumes of 9.6 trillion daily in just FX traded across like the world. This is not a fly by night industry. This is the largest traded asset class in the world. So but the level of impact and like positioning, it's still wild to me that we have innovation around lending markets using Aave and using Aave and Morpho and any other tools. We have innovation on like stablecoins and being able to move payments and doing all these things that now exist on like the blockchain. So we have tokenized lending, we have tokenized real estate, we have tokenized payments in the form of stablecoins. But we don't have tokenized FX. We don't have on-chain FX, and it's the largest asset class. It's kind of insane if you really think about it. And so from a trading standpoint, I think there's still a lot of innovation that needs to happen. One, when we see the proliferation of stablecoins, I think the ability for people to build like profitable like FX trading on chain will actually be really, really massive. From a ViFi standpoint, we've taken the slice of that particular problem, which is just simple emerging market effects, and like tying that to actual real world capacity to move value across different regions. And so there's a last mile aspect when we're looking at, well, we have tokenized US dollars and we have tokenized local currencies. We just haven't figured out this one piece, which is how do we swap them on chain in a way that is capital efficient. It's a very simple logical problem that needs to be solved so that we could unlock the next wave of like innovations and things that could actually happen. And so ViFi has just one take, but we're looking forward to seeing different regions, different companies, different builders coming up with their own takes on how to solve this particular problem. I would have no doubt that when ViFi launches in July or August, inshallah, we find ourselves in a situation where somebody's going to look at our design and be like, "Oh, this is trash," and this is how we could actually make it better. And to me, that's a net good. And the only guarantee is that we're going to keep like innovating and building around this particular problem for a long period of time. But there's also G20 FX trading, which is pretty large by itself. And so we still haven't seen innovation that actually happen in a way that's actually like impactful there. The other thing that is still lagging behind, but is still coming across in terms of just asset classes, are stocks. Stocks and bonds are slowly coming on chain. And so we see like the major CDSs coming on chain. I think DTCC is coming on chain. These are people who are, like have trillions in assets, right? You have stock markets that are slowly coming on chain. I mean, and the New York Stock Exchange has openly expressed its desire to have fully tokenized markets are available 24/7. And so part of what we're looking at in terms of the wider movement and what blockchain now represents, right? We've gone past our cypherpunk days where we had the luxury of just having puritanical views, where there's a different use case, which is 24/7 trading. And so if you look at how the world has functioned up until this point in time, I can send a message to somebody across the world on WhatsApp at any time I like. But I can't buy a stock at any time I like. And I can't sell a stock at any time I like. I can't buy a bond anytime I like. And so those are the types of innovations that I think over the next decade we're going to see in terms of more and more tokenized assets coming on chain. And I think FX would play a very central role in unifying the global financial system so that a Nigerian could buy like tokenized assets from a different region, leveraging an on-chain FX engine such as ViFi. That's the future we're actively building towards.
Really, really amazing. And I can't wait for all of this, to unfold and such that, everyone is plugged in and aligned, right? So I'm curious. While I was digging up, right, I saw quite a number of amazing stuff that I want to personally, dig into. You mentioned that you met your co-founder at an hackathon, right?
Mm-hmm.
Yeah. Looking back, what do you want to say as regards that? Was it a coincidence or it was an intentional act? And how did you guys finally say that, oh, we want to build this together? What traits should any founder looking or watching this video look out for when choosing like a co-founder? Do you have any thoughts on that?
Yeah, so I think in October, I'd been mulling about the idea of like doing my own thing for some time. I think one time I logged into a all hands at Polygon and I heard Sandeep talk about his like founding journey and how he got to where he got to. And I was just blown away. I was like, yeah, I think this is me. This is what I'm supposed to be doing. I'm not supposed to be an employee. I'm not supposed to be working for anybody. And that kind of like served as the immediate source of inspiration. Then I began looking into, okay, so what am I going to do? How is that going to work? I looked around at my existing network, people I know, there was virtually nobody I was with who had the same kind of interest, experience. I was the only one in my friend circle at the time that was working inside a blockchain. But there's a co-working space that I had helped found in Trinidad, where I was an early investor in. And so Varun just walked in there one day. And while he was in there, I think we were having a discussion and he was telling me about this whole idea of the decks and all these things, blah, 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 blah. And I was working on some kind of rudimentary solution as well at the time, in terms of looking at like the different arbitrage opportunities that exist inside of different markets. And so he and I began jamming on like what this kind of thing would look like. And so he then kind of showed to be like really, really great. And like he's like the math whiz, basically. And our conviction was that, yeah, we need DeFi for emerging markets, and nobody's going to build like strong DeFi tools because nobody has the same life experience and understanding of the problem, and has been dollar constrained before. Barun had a terrible experience where he was being forced to defer his studies because the Trinidadian banking system couldn't give him enough dollars for him to pay for his masters abroad. And so it's like a lot of those kinds of like experiences that form like the secret sauce. And his and my journey were kind of reflected in terms of you're from emerging markets, but then you have excelled and like moved into like the DeFi ecosystem, and you're functioning at a very high level. But then there isn't like sufficient innovation that supports, like there's a sense of dissonance that kind of existed between the sophistication of the solutions we were seeing from emerging markets and the development of the ecosystem. And so we wanted to be like champions and be good representatives of what that is. Beyond that, I think one of the most important things that Varun and I kind of agreed on is just like a shared value set. We are both very, very brutally honest. I like to say we don't have arguments, but we have very strong intellectual like exchanges and like debates, and things are worked out in a way that really, really are strong. And then the other thing is just filtering for the same values. I think people still wonder. There was a time when like Varun and I drove from Nairobi to Mombasa for 8 hours, and we were talking the whole time. Like there was no lull. There's no point in time where there isn't like stuff to talk about, and it's not just frivolity, but there's like a sense of shared values. And when you're optimizing for those things, it's not, you have to look past like superficial things. There's people who say, he's a Hindu and you're a Christian. How could you possibly work together? But then when we peel back against all these things, there's just fundamental anchors of character and faith that I think we still kind of like jam on, in terms of just how we want to approach life, the kind of impact we want to have, our strong sense of like integrity, being like honorable, and wanting to really make a mark for the countries that we're actually from, and for the people we want to be able to represent inside of this ecosystem. So yeah.
Yeah, that makes a lot of sense. Two things is like you guys are on the same value set, right? You guys share the same values. Most importantly, on like the vision of solving the problem, you guys are on the same page. You guys have, had sort of like the same experience in the past. Which sort of like makes you guys, the right fit to, to be building the solution. Really, really amazing. I think for anyone watching this, looking out for like your co-founder, you guys have to be on the same value page, whether from the product side and also whether from like the character side also. Yeah, really, really interesting.
The character is
It brings me
everything.
to right.
Yeah.
It brings me to like my next question of you acquired OneRamp at the time. That's not like a typical move for like a young startup. What did you see that others didn't, or what basically led to that decision to acquire OneRamp?
For us, I think from a very early standpoint, we knew where we kind of want to stand. So ViFi is a totally decentralized protocol. Its governance and everything will be managed through a community. So the eventual ViFi token holders, but like different people coming on board and helping with the development and building of the particular protocol. So ViFi doesn't belong to Varun and I. We might have been the founders, but in terms of how it functions, there's like credible neutrality built into that particular the functioning of the protocol, which is exactly how we would want it. And so even my title at ViFi really and truly is just co-founder or like key contributor. But in terms of its actual governance, I think everything is going to be like on-chain governance. So OneRamp becomes the layer that is the last mile, because when we come into Nigeria, you need to have a certain level of integration with either payment service providers, crypto service providers, banking service providers, so that the value could move directly from like the domestic banking system into the on-chain ecosystem in a way that is fast and efficient. And that's the problem that OneRamp essentially solves. At the time of acquisition, OneRamp had integrations to about 7 different African countries, and meaning they could move payments in and out of those particular regions. Now, the place that ViFi stood is that ViFi really and truly is a B2B platform. There's a strong focus there in terms of being able to unlock liquidity for like cross-border payments and businesses that are looking for, well, cross-border payments and remittances really are the two major use cases. But then from a retail standpoint, people still need the ability to be able to move in and out of their USD positions. And so that's what we then become like as OneRamp essentially becomes a solve for, where we're able to move value directly from like a bank account or from a mobile money. And you pay a particular number, you pay to a particular bank account, and then that value is then credited on chain, and then you could now use ViFi. So that really is the OneRamp is the on-ramp to ViFi, basically.
So really, really interesting. So OneRamp basically plays like a major role in what ViFi is trying to solve, right? Really, really interesting, and which is what informed like the decision. Now let's talk about raising funds, right? What has changed for you, after raising, and most what are those things that most founders don't talk about, and what are some recommendations when it comes to like raising money as like a startup or as a company?
I think one of the if I was to summarize it like quickly, I think it's storytelling. A core part of like raising money is storytelling, and especially for us working inside of emerging markets and getting people to care about problems that they are not necessarily impacted by. I think that was a very difficult journey for us to be able to like navigate, understanding how to talk to investors and what investors care about. I think that's a very, very, I feel like I could write a whole book about that, especially for like emerging market founders, trying to raise from global VCs. So we never really dealt with like the African VC ecosystem really and truly. I think we only got one check fairly recently from an African VC, but we've primarily raised from like global VCs. And a lot of it was like trial and error. Like we would hop on calls and talk about the wrong things, position things in the wrong way, try to like, there was just so many mistakes that we were making, and we had to learn in terms of how you make people care, because investors ultimately care about, is this a big problem? How am I going to make money? And why are you the best people to solve this particular problem? The question is like figuring out like from a story standpoint, understanding what investors care about, first of all. Is just understanding like the fundamental questions. Are you building a venture outcome business? Because a lot of the founders from emerging markets are building a business that they're very passionate about, but it's not like a venture outcome business in terms of there is no 40, 50, 100x outcome that could be tied to this. Am I building a globally scalable business? And so figuring out if you're building like a lifestyle business, that essentially the total addressable market is, or even the serviceable, the obtainable market is quite limited, or is geographically capped, is like a factor to consider. But then when you're looking at scaling this company globally, you have to like consider all those kinds of things. So once it is that you are building a business that is a venture outcome business, then the question then now remains is how do you communicate this in a way that investors would like know, understand, and care about? And for them, they're looking at, is this a venture outcome business? Is the serviceable obtainable market or the total addressable market large enough? And then the other thing is like how much money will this make me, and like how much revenue is there in this? And then lastly is, why are these people the best persons to be able to execute on this idea? Figuring out how to package that in a way that makes sense, condensed, and tying down your story is like something that's super, super important. I think one of the most important skills in being a founder is storytelling. And you kind of have to really invest in that aspect of the business. A lot of times, I think we started off going into the technical weeds of how our protocol mechanics work and all these things. And like investors are not really keen on that unless I ask, then you could like delve into it. But figuring out how to package your why and making that something that is acceptable and investable is the most important thing. So figuring out how to make your why something that is investable is something that I think a lot of emerging market businesses need to like figure out in a way that is scalable, so that if it is you are building a venture outcome business, then the question now is storytelling.
Yeah, really, really interesting. I think that makes a lot of sense, especially like I think what I'll say from that is strategic storytelling, because you mentioned, there are quite a number of things that the investors are interested in. Something like, are these people like the right person to like build this? So, and I think yourself and Varun are like the right person because you guys have experienced this firsthand, and I think you guys have been able to package this into, like the type of storytelling, reaching out to people and whatnot. Really, really interesting. Thank you very much for that. And I trust that every other person watching this also would, inculcate that into sort of like how they approach raising funds and also positioning themselves, in the industry. And I think that's one reason why, I started this podcast such that people who are building from Africa can tell their story, right? What they are building and why they are building, and why they're like the perfect fit for it. Thank you very kindly. So to my next question, right? Most people complain about government on Twitter. I mean, right? And but you are sitting in rooms educating policymakers, regulators. Why did you choose that path? I mean, over the couple of years, you've worked closely with regulators and government parastatals in Kenya, right? So two questions: why did you choose that path? What do they understand about crypto that the average founder completely misses, right?
I don't think I chose a path. I think the path kind of chose me. Quite frankly, I think getting into the industry at the time that I did, there was a real question of regulation and how regulation is going to impact us as founders, because essentially the government is the one that's setting the rules of the playing field, right? And so trying to escalate that to the level of like where like a business, there'll be like business impact, I think is what kind of pushed me into that particular role, and seeing the need to like shape discussion. So for instance, why I say the path kind of chose me was in our very first engagement with the Central Bank of Kenya, where they had the public participation before the bill even went to parliament. The draft that they had produced did not have anything to do. They did not mention anything about local currency stablecoins. In fact, stablecoins are not even included in the legislation to begin with. And I remember when I was given a chance to speak at the public participation is when I actually said, well, no, we need to have a local currency stablecoin because it serves as a unit of account. It helps like price in the local ecosystem. It serves as an enforcement layer for AML, and also KYC, and also taxable events. Like there's a lot of utility in having a local currency stablecoin. And in the space of 2 months, when we were reading the next draft, when it went to parliament, they had already included it. In fact, 2 weeks, they had already included like some beginning legislation around it. And like it was the beginning of, I think, African governments beginning to grapple with this whole idea of local currency stablecoins and how they're supposed to function. I still think there's a long way to go. Right now, I think when I look at the African landscape, there's an overvaluing of what this means for like local currency stablecoins and the impact it's going to have. But then in looking at the impact of being able to speak with regulators, is that like you're able to lend your years of experience to shape policy. in a way that supports innovators, right? I think a key goal for me is, even as I'm speaking to all of these legislators and regulators, is one, the recognition that Kenya serves as a template, and there's precedent for Kenyan laws being applied lock, stock, and barrel in like different regions without much consideration. And so there was a need for us to get it right there. And then crucially, the other thing is creating an enabling environment for businesses to thrive. So other founders, while a lot of people would say, oh, well, we were trying to get like a position for ourselves or anything of that sort, that was never the intention. It was through sustained engagement that the legislators came and said, oh, we want VACC to play this particular role or that particular role. But it was never something that we actively lobbied for or pushed towards. Like, that was not a goal. And where we stand now is that, like, we're standing on the cusp of just like legislation rolling out across Africa. I think most governments are going to get it wrong to begin with, but there's room for correction, hopefully. When we'll see different regions emerge and do things a little bit differently, there'll be room for correction later on. But I think it's a massive privilege when you find yourself across a legislator or a regulator, and you create an enabling environment for them to ask questions about the industry, and you able to answer in a way that provides value to them. So it's a massive privilege, and I guess one of the highlights of my career as well.
Yeah, right. Absolutely. Can you tell us what the bill is and like the current progress right now? Two things. The second is that as the VAC chairperson, how did you come about your team? You mentioned that the paths sort of like chose you. If there is any like advice for somebody trying to do this in their region, because you mentioned that if any government is trying to do this, they wouldn't get it right at best. So what would you advise for builders in other emerging markets, take for instance Nigeria or other African countries, to go about this?
Well, one of the things that I was fortunate about, even like my engagements with VACC, is I found Alan Kakai and his team, Bill and Basil, and these are really strong attorneys who are involved in the policy discussion long before I even joined the whole affair. And there were several other people as well who were involved in policy discussion and setting up like a proper regulatory framework for everything that we need to do. Where currently it stands with the bill as at now is that the bill was passed last year in October 2025, and now we're looking at the subsidiary legislation or regulations that need to come into effect. So if you think about it, the bill essentially establishes the highway, and the subsidiary regulations define what the lanes are. And so it tells you exactly where you want to be. If you want to provide this particular service, this is your lane. If you want to provide that particular service, this is your lane. So that's essentially where we currently stand now. And that is going for public participation now. It's meant to go to like the House for review, and we'll see where that lands. Some of the provisions. The thing is, when you speak with regulators, and like specifically regulators, they are burdened by a desire to get things right, which is something that genuinely surprised me. They really want to get it right. They don't know. They like, regulators have spent a lot of time doing their own research, and it takes a lot of time for them to come up with a particular position. And like, it's very easy for us to fire off tweets and messages on LinkedIn and like say all of this and like be like critical. But I think when you actually sit with them and then you realize, oh no, these are your fellow countrymen who have been given a responsibility to provide guardrails to a burgeoning industry, and they just want to do their best. And I think with that particular reality, then it kind of tempers like all the vitriol that we kind of see online, and you want to engage with them on a more one-to-one basis. And so if you want to replicate this, I would say it's a question of like developing a good relationship with the regulators outside of just like doing tantrums on Twitter that don't help anybody. You have to move past that activist mindset and more to like a policy engagement mindset, where you're able to provide a perspective, and you're able to become a trusted voice in a way that reassures them and gives them a direction and a basis to vote for like consideration. The other thing to be continually aware of, even as you're looking at legislation being crafted for virtual assets, is that there are local interests and there are massive, massive global interests in every context, right? So finding the balance in a way that supports local entrepreneurship, but also sets guardrails for global multinational corporations in virtual assets, I think is something that is a burden that they have, and they really struggle to be able to come up with something like that. So I think a lot more patience is required to engage with regulators. Deliberateness in terms of being a trusted voice rather than an activist, I think is one of the most important things.
Yeah, thank you so much for that. I think I also do love, the part of being patient and also trying to engage with them other than just throwing tantrums on X and going into the trenches with them, because they're also trying to, like you mentioned, they are also like our fellow countrymen trying to, set guardrails to ensure that everybody is safe, participating in the ecosystem. And we just have to be patient, right? Really, really interesting. It brings me to like the next question, right? What's like one belief about crypto or startups that you hold that most people would disagree with?
Hmm. I'm not sure that I hold any controversial opinions about crypto or startups, but I think part of the whole point of it is that, like, remembering the foundations of what this technology was meant to have. While we're seeing adoption happening from traditional finance and all these places, I think it's important for us to remember the foundations of it, which is self-sovereignty, censorship resistance, privacy. Those are important values for all of us. And as we're looking at the scaling of the industry, we'll see very many rent seekers come and try to take advantage and hijack the agenda. But at the goal, it doesn't matter if we have all kinds of tokenized assets on chain, but we replicate the same barriers that have existed in the global financial system for the last 100 years. So it really does open the door for ease of trade and movement. But I'd like to live in a world where we still uphold the initial values that brought the industry to where it is today.
Yeah, I think this is like a thing that even some other founders have been talking about, right? Where we have to really, really go back to like the fundamentals, why we basically like started all of this. But before we sort of like go into like your personal thoughts, in any case, earlier on during like the podcast, I asked like, what would anyone listening to this podcast go home with? And you mentioned something like, they're going to understand why people are using stablecoins, the impact it's having and what they are being used for, and basically its impacts in domestic regions. Do you want to shed more light on, why are people using stablecoins, the impact it's having, and also basically the impacts it's having in the domestic region?
Yeah, I think one of the most important like areas of consideration, which is something that we had to learn as well, was from the very beginning, we had this notion of crypto usage being retail. But that was quickly debunked when we started talking to more and more users and understanding like the problems they had and so on and so forth. And as we move that conversation forward, we found, well, it's the largest companies inside of these regions that are using stable coins to be able to rebalance their books so that they could actually do more trade. So you have the now infamous case of Bitco and its failed $900,000 USDT trade, which exposed like a big usage. And Bitco is a fast moving consumer good manufacturer. And they have, I think, 17 products they have 50 products in about 17 African countries, and they're using USD stablecoins. And then crucially, I think the other thing that's been debunked, or rather that's continually being debunked, is uncovering where the flows are actually going. in our findings, the largest trading corridor is between Africa and China and LATAM and China. Like the trade between Africa and LATAM, the trade between China and the rest of the world far, far eclipses the trade in other regions. And so, given that reality, the question is that we have the USD that is sitting as an intermediary between these two trading partners, and US dollar stablecoins provide a brand new mechanism for that to change. But crucially, as we move past that particular initial use case, I think we're seeing a world where the payments are terminating in Hong Kong now, and people have to move it like through traditional finance into like mainland China. And if you're looking at how to set up like far more efficient capital and trade, I think that Sino-Africa trade and that Sino-Latam trade is a major unlock that still needs further investigation and innovation. So yeah.
Yeah, nice. Do you want to touch on like where stablecoins are being used, or what stablecoins are used for specifically in this part of the world?
I would say USDT on Tron is king. Inside of these regions, everybody wants TRC. People don't care about Base or Scroll or Polygon or anything of that sort, which is hard to believe. But USDT on Tron still is king in a lot of these regions, and simply because of just utility and history and efficacy of that particular network and how it kind of functions. We're seeing trade moving to these other chains slowly, but I think part of it is just understanding that there's a reason as to why that happened, and simply because when you're looking at USDT, specifically USDT dominance, is there wasn't that purely Western view that promulgated like how businesses function. And so because there wasn't a Western bias like would have been experienced like say with USDC, which is mostly being used in DeFi Lego blocks right now, is that you're seeing utility happening. There's a reason why Binance became the largest exchange quickly, because there was a global South view that you bring to business. I think that creates a particular advantage. And so part of the message, even just for like founders generally from emerging markets, is that like your view has a capacity to build $1 billion company if you position yourself accurately and you're able to execute on things the way that you're supposed to. I think the opportunity exists. It's still early, but if you look at some of the large crypto projects in the world, like not all of them are coming out of Silicon Valley. Jupiter is from Malaysia. You have Argentinian companies that are doing different kinds of things. You have different layers and different kinds of like utility being built outside of the traditional innovation centers, and I think that should serve as a example point for other regions.
Yeah, thank you so much for that. Now I'm going to like the more interesting part. I mean, we've talked about ViFi, which is like the really, really interesting part. But now on a personal level, I would like to know like what does success looks like for you? Um, what does success looks like for you? And also that's the first part. How do you balance work, family, and other interests? And lastly, if you can take the three at a go, what's like your retirement number, so to say?
um I'd say for me, the goal is to see ViFi launched and providing utility in the real world, in a way that no longer needs me. I'd like to see a DEX, like the DEX is launched, new local currency stablecoins are listed. There's active like FX swap volume happening. The TVL of the chain is of the protocol is increasing. Fees are being generated for our LPs in a way that is meaningful and impactful. That really is a North Star for me. How do I balance work and life and all these things? The answer is I don't. I'm a founder. I think part of the reality is that like you're kind of married to your business first, which is a terrible thing to say, but it is reflected in like the level of effort and work that is being given into like your business. And it's important to find a partner who's willing to support you as you build this thing that is like another baby inside of your household. So you need very strong support, because founder life is hard enough as it is. And finding somebody who could support you through it is like fundamental. And do I have a figure? I actually don't, to be honest. I think some of those things are very overrated. There's no amount of money that's like predominantly like enough. I think the main thing to work towards is passive income, where you have enough coming in a way that is able to support like your lifestyle without you working. I think if you're able to crack that, then I think that's more meaningful, because then you get back your time. But if you're working towards a particular figure, you get that figure, but if you don't know what to do with that money, then it becomes a bit of a challenge. So the thing is just replicating like those FIRE principles. Whatever it is you choose to do, just make sure you could like replicate your current income. Then you're actually really good, because then you could essentially retire, or you could essentially have freedom in terms of like just financial goals. And I think if you live by those FIRE principles, I think it like enables you to have a measure of freedom. Yeah. I don't know if people are familiar with FIRE. I think I forget what the acronym stands for, but it's like financial independence, retire early, or something of that sort.
Right. I think there's like a whole community around fire for some reason. I think I
Yeah.
stumbled on it time also.
Yeah.
Thank you very much for for sharing that. Before I sort of like bring the podcast to a close, two questions came to mind. Like, what's like one of the biggest lessons you've learned building ViFi, and also what's one thing you've never said to anybody that you actually want to share?
Okay. Difficult for me to think of anything for the last question. But in terms of building ViFi, I'd say a relentless focus on the customer is the most important thing a founder could do. So go out as early as possible and talk to your customers. That's one of the things we like elevated from the very beginning. And a lot of the mechanism design and stuff that we did and how things were set up was born out of very many customer conversations and interviews and discussions and locking in this and that. And more of that is like a measure of research. So I have a strong UX research bias, because you want to be able to understand consumer behavior. And if you understand like your customer behavior, then you're able to build a solution that actually solves a problem for them. And if you don't understand their pain points, then it creates a bit of a challenge, I think I would say. Something I never said to anybody, but let me just rephrase maybe the question in terms of like a parting shot, is you should always have always work on like believing in yourself per se is good, but like have the confidence to walk through the doors that God is opening for you. Because a lot of people like doors open, but you just don't have the confidence to walk through them. And so you're like, nah, it can't be, that's not for me. But I think if I was looking back at my journey, I think that would be it. It's just having the confidence to walk through the doors that God is opening for you.
Yeah, really, really amazing. I think that's sort of like ties to like betting on yourself, right? And working in alignment with what or the door that God has opened for you. Right. Thank you so much for that insight. And so now there's like this session that I call Break the Block. This is particularly interesting also. If you had fresh capital today, I could invest in one African Web3 company. Which one and why? You're not permitted to mention Wi-Fi because you're building Wi-Fi, right? And also feedback on any Web3 tool or products that you use. Any feedback? could be a developer tool, any type of product or product that you use.
I would say it's very difficult because like these are my friends. So asking me to pick is like, which of your friends' companies do you like the most? I don't know. It's a toss-up. Very difficult for me to say for sure. I think Ultra Markets by Njoku is very interesting. Yeah, I think that would be the thing that's like mostly on my radar now. As like the type of business that has the capacity to reach escape velocity fairly quickly with minimal effort, I would say. Yeah, Ultra Markets by
Awesome.
Njoku.
Yeah, I think one of these days we'll also be having a joke on the podcast, right? So we can get this journey and all of like thought process building Ultra Market. So yeah, really really interesting.
It's a very
The
boring
last.
guy. It's very boring. You don't want it.
I mean, we'll find out, right? So the last one, what Web3 tool do you use or products and feedback on any of those two?
I don't know. Block Ops by Ade.
Yeah.
Yeah, Block Ops I think is super interesting. We've integrated Block Ops on ViFi. And it's been dope. Yeah.
Interesting. And all of these products are like all African products. So yeah, really, really interesting. I'm super, bullish on like the products coming from this part of the world and what that would look like in the next 5 years or like 10 years, right? We're still in the early stages. So yeah. Thank you very much, Tony, for like joining me on the podcast today, sharing your
Mhm.
journey, your insights as a founder. And I'm sure quite a number of, the listeners or the viewers have gotten, one or two insights from like your journey and like your experience building ViFi. A really, really interesting conversation today. And if this conversation made you curious about what Tony and the team are building, be sure to follow him on X and check out ViFi Labs. And if you found
Yeah.
this conversation valuable, right, please like, comment, and share. Also, subscribe to the channel for more conversations as this. Thank you very much for watching. Thank you very much, Tony, for joining. And I'll see you guys in the next episode.
All right. Cool. Thank you so much. Bye, folks.